What is going on, SoFi fans? Welcome back to Financial Journey. So I don't think it's any secret that a lot of big money is very fearful on where we're heading in the economy, but I want to talk more specifically on what Goldman Sachs recently just said and what that might mean for the bigger picture on the economy and also SoFi. Outside of that though, I want to talk on what SoFi is trying to do to mitigate any risk. And I have touched on this on a couple of videos, but I just wanted to sink that in for a lot of investors. But before I get into any of that, making sure you guys hit that thumbs up and subscribe is always greatly appreciated. And with that, let's get right to it. So as you can see right here, the greed and fear index, a lot of people like to look at this just vaguely, but we are in extreme fear. So I think a lot of big money is following suit, similar to what Goldman Sachs recently said. And not just Goldman Sachs, but BlackRock is also mirroring that as well. And they're very sour about equities in general. So I think that when their new 13F does come down the pipeline, most likely for Q3, it does show that they are going to be pulling a lot of their assets. BlackRock in Q1 did have significant losses associated to Russia, so they lost a lot of money in that aspect, but a lot of specialized institutions have been losing a ton of money. Even SoftBank, I believe, lost $27 billion just in Q2 alone. So I think a lot of institutions are very weary on exactly where we're going. But what Goldman Sachs recently said is, with the current situation and the bonds selling off as much as they have been, the probability of a recession has now risen above 40%. So I think that is very scary for a lot of individuals. Obviously, there's some institutions out there hypothetically saying that we could drop 50% even on these levels. So I think that's going to be very detrimental. Keep in mind, I'm not a financial advisor. Do your own due diligence at the end of the day. In previous videos, I have given some kind of advice to some investors because I know a lot of new investors have gotten into SoFi, chose a very good stock, but it's one of those situations right now. The economy is just bad. We're in a bear market, but we do have a very good fundamental business. So just be very cautious if you do have margin and if you are trading on margin. So that's just my own experience. Like I've always said, I've been investing since 2009. So I've made some mistakes in the past. So hopefully I made this channel to make better investors and you guys can learn from my mistakes. So again, just take that how you see that. But funny thing is, JP Morgan has been very bullish on the broader market, especially since January. So they've had a lot of articles saying, you know what, this is the bottom, blah, blah, blah. But recently, they now came out saying that all-time highs is going to come in most likely 3 years. So it's a little bit more of a bearish, optimistic stance, if you want to call it that. So they're still talking about all-time highs, but now they're saying instead of the tail end of 2022, it's going to be coming in 3 years. So I think piecing all this together, it's a very interesting time that we might be getting into, but it goes to show that there is a lot of fear. Funny enough, though, is the latest round of 13Fs is coming down the pipeline more so from ETFs, and you can see BlackRock has added a lot of new positions of SoFi. So again, it's one of those inconsistencies. So they're very bearish on the broader market, as this article does say, and plus they've come out over the last couple of months on this same point as well. But based on the 13Fs, a lot of their ETFs have been increasing SoFi. So very inconsistent if you ask me. And if you are like myself and follow the dark pool transactions, a lot of big money has still been buying SoFi, as I bring up on my daily videos on SoFi, just routine ones. But interestingly enough though, last Friday, so I believe that was on the 23rd, there was significant money getting in. My apologies, it was the 26th. But as you can see right here, I brought up this one transaction. So 46.4 million in one single transaction. So I beg the question, who could that be? Obviously someone is buying, despite the fear in the market, despite everything. A lot of big money was buying on the 26th. So let me know your thoughts on that, and if you have any inclination on who that might be, possibly 𝗪𝗪𝗧𝗛, because when it comes down to it though, the technicals and everything are pointing to SoFi going to be very appealing to a lot of value investors. So let me know your thoughts on that in the comments below. But when it comes down to mitigating a lot of risk, SoFi has done a phenomenal job. And referring to SoFi's Q2 earnings, in here, obviously, like I've already mentioned many times, there's been 7 analysts that joined us, all of which asked questions and all of which had the same kind of mentality. What is SoFi trying to do to mitigate risk to avoid a potential recession? And oddly enough, right here, you can see Jeff from Morgan Stanley did ask a question. And again, a little bit more of a side note is I found this funny during the actual call. I brought this up during the live stream. Every analyst says you had amazing earnings, congrats. All they say is, so you had a pretty good quarter. And it's very funny what Morgan Stanley is in the grand scheme of things. But still, despite that though, they're saying, just wondering if there's something going on in the back half of the year that we should be maybe looking for, or are you building maybe some degree of some conservatism in your outlook here? So obviously insinuating what are you doing to mitigate a lot of risk. In here, in Chris's response, they do talk on the same thing I've been bringing up. They have high quality customers, so we're able to have high FICO scores. They all earn a lot of money. So like I said, even if there is a recession, yes, a lot of individuals are going to be fairly hit by that. But SoFi, as far as mitigating risk, it's in a better position than a lot of the traditional banks. So that's my own 2 cents on how I see that. But again, the common thing that is being said during this Q2 earnings is that SoFi has done everything possible to lower its risk from a possible recession. And even more so with this recent news with Galileo expanding its payment risk platform with _Advisor. That's a very big fraud prevention. And in reality, I believe the article did say that they are anticipating that fraud is going to reach $35 billion by 2025. So the fact that Galileo and SoFi are doing things to prevent that and obviously further damage to their bottom line, that is a very, very good thing. More so as well with SoFi expanding on the credit card front. So I think all of this pieces together why we have a very good investment. It does suck the economy right now. A lot of institutions, like I already said, are very bearish. But you have to realize that fundamentally find a good company that is going to do a lot of good things in the future, not necessarily so much in the short term. But like I said, this is only for entertainment purposes, so make sure you guys do your own due diligence at the end of the day. With all that, I appreciate you guys watching. Don't forget to hit that thumbs up and subscribe, as always greatly appreciated. And if you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that, I appreciate you guys watching, and let's all make a lot of money on SoFi.